Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at ASML Holding NV, ticker ASML. This is a Dutch company, which has some implications, but I'm looking at stocks that I might want to pick up on a pullback. I keep seeing charts about stocks being at all-time high valuations, which I tend to agree with. You can go through the channel and look at a lot of these videos, and there's just a lot of signs that we may potentially be in a bubble. So if it is to pop, I want a list of stocks that I'd like to buy. And this one I think might be one of them. So I'm coming up with a fair value of 613. It's currently trading for 743. But there's some good stuff. Earnings yield currently 2.91, so you'd want 37.2 EPS for what you're paying, and what you're actually getting right now for this year. Expectations are 23.95, so it is pretty high. Next year's projections are 25.62. Still not towards the end of what you're paying. I mean, if you scroll down here and look, PE ratio currently 27, which is pretty high for the growth that you're getting out. 20 to 25 might be fair, but your earnings growth rate is 7%, which gives you a price to earnings growth of 3.85. So it's definitely trading at a massive multiple to earnings. But then we get into the good about it. Cash flow yield 32.1%, on average 32.7. So cash flows are super strong here. They're even down from the levels that they had experienced back in 2021. So they could have even higher cash flow yield if they get back to those levels. Bottomed out in 2023, and they're on their way back up now. Dividend yield 1.1, on average 0.8. So that tells me that they're pretty good about raising their dividend, and you can see right here that they are. Definitely some really good dividend growth. There's room for it as well. Based off of last year's earnings, they're at a payout ratio of 33.5, and based off forward earnings estimates, they're only at 27. So that even drops them below the zone that we look for a safe dividend. Lots of room to grow it. I expect them to continue with that. ROE really strong at 41%. Debt to equity 1.63. That is pretty high, but in their industry, it does take a lot of equipment. You can't blame them too much for that. It does just skew this, but even then, return on equity is incredible here. As are the return on investment and the return on assets. 17.5 and 15.6 are very solid numbers, some of the better ones that we've looked at. And that's why, fundamentally, I mean, this is a super good, sound company. I see why they're trading at a multiple. Gross margins 51.24, on average 51.38, and net 26.75, on average 28.32. So they have room to get those margins back up towards their average. That'll get their margins back up. Revenues slowing down a little bit over the last 3 years, 15%. Over the last 2, 10. Analysts are projecting almost 14 this year, and then 9 over the next few. So 10 definitely seems to be a fair number here. I mean, you could take it down to 9, assuming it tapers off over time, which analysts seem to be believing. So my number might be a little bullish here. Share count, they're good about buying back shares. You see almost 0.2 this last 2 years, and 0.83 over the last 3 years. They definitely get a green flag and thumbs up for that. Cash flows, well, they could probably go even higher if we're looking to get them back to those 2021 levels. And we can take a quick peek at what those were. Cash flow yield, 53% in 2021. And outside of that, they've been in the 30s. 2022, 2024, currently, the 30s definitely seem to be reasonable, but maybe we can kick it up to the mid to upper 30s. So take that from 11 to 14. That gives us, in 5 years, a cash flow yield of 38.4, which is a bit better. And that does help down here with our annual returns. Now, assets, Slowing down on growth, not surprising there. 17% over the last 3, 10% over the last 2. I wouldn't be surprised if they came in even lower than 10%. 6 to 8 might be fair. So if we put a 7 there, this is going to bring down the annual returns a bit because this is going to lower their balance sheet portion. Liabilities, 14, 3. So they slowed down big time on adding liabilities. I mean, it'd be nice if they were to pay that down, but 3 is definitely a good number here. Dividend, 12% brings you to a dividend yield in 5 years based on today's cost of 1.7. It's definitely not going to grow at that same rate that they had because you have a larger dividend base now. But that brings them up to almost $13 in 5 years. I can bump it up a little bit and see what 13% gives us. 13.4 for a 1.8% yield. Maybe we can run with that. And then margins, 1.5% will bring them back up above their average. It'd be great if they could get to 30, which would be about 2.1. Yeah, about 2.1% annual growth, which isn't too much to ask for. With all that, you see, we're currently trading at essentially 3-year out valuations, which we see on a lot of super solid fundamental stocks. So that is not a surprise. Factoring that dividend in, looking at the value to be in 3 years, and then you're hoping that in 3 years it's still trading at a valuation 3 years out, which would mean you're buying in right now at 750 and expecting in 3 years it to be trading for somewhere near $1,000. And then in 5 years, if they're not trading at a multiple still and they're actually trading at their fair value, you're underperforming the market by 17% because of the price that you got in at. You're getting annual growth of 13.4. Once you factor a dividend in on that, you're getting 14.6. So this is, last time I reviewed it, I said it was a really good growth stock. I feel like it's becoming a bit less of a growth stock and kind of coming in line with some of the other just super solid fundamental, the FANG stocks and the massive players in the S&P. But if you were to get in at that 52-week low that shares have seen, you'd be outperforming in the next 3 years by 3%. So beating out the market by almost 10. And then in the next 5 years by 20. And so that's why I have my eyes on this one. I think it's super solid fundamentally. Everything here is really good. It's just trading at a really large premium to the earnings. And this one checks all the boxes for me. They're buying back shares. Their cash flow yield is very high. Margins above 30 and 10. Even better than that. ROI, ROA, ROE are all 15 or above. They have a growing and safe dividend. It's just the valuation that I haven't. So I'll be patient and see if it comes down to a price that I like. It's been there. It's been a lot higher than the current price as well. So I want to thank you guys for watching. Please like and enjoy the video. Comment what other stocks we should take a look at and subscribe so you can stay up to date with everything. And I'll catch you next time.